For all of you that don't already know, CPI, which is Consumer Price Index, is going to be coming out this Wednesday, July 13th, and it is set to be the largest CPI report that we have seen yet. But others are saying that this might be the peak of inflation also. Let's hurry and run through what the current expectations are for this coming up CPI report, not only on the core numbers, but also on the headline numbers. So let's go ahead and start there with the headline numbers. Currently right now, as you can see on screen on Trading Economics, the consensus right here for the June report is that it's going to be coming in at 8.8%. Yes, that is the highest that we have seen so far. I mean, even comparing it back to the last report that we got for May at 8.6, that's a 0.2 increase on the year over year number. Now, month over month for CPI, we can see right here on investing.com that the forecast is actually set for 1.1%. Now, guys, this is nasty because of the fact that we are actually going to be seeing month over month data tick back up from the 1% that it was back on May's report. Now, this is going to signal to the Federal Reserve that maybe they need to continue to tighten harder, and depending on how hot this inflation report comes in, we could even see them maybe go for a full point hike. Now, obviously, that's not being priced into markets right now, which is why it's such a big deal. If we get a really hot CPI report, say this month over month figure comes in at 1.2, 1.3, 1.4, higher than what the forecast even is, which is already set to be the hottest month that we've seen yet, we could see them do an emergency meeting and decide to freaking hike rates as quickly as possible to try and get this thing under control. Now, I'm not saying that's going to happen, but it's just something to keep in your mind, considering that right now inflation is definitely running at a very fast, hot pace. So now let's go ahead and talk about these core numbers right here. So core numbers, and this is where we get a little bit of some good news, core numbers are actually forecast to start trending down. Now, you can kind of see on this graph over here how it's been trending down for the last 3 months at least now on our reports. And June is no exception. It's supposed to come in at 5.7% core year over year inflation. So if you're not familiar with core is basically the CPI headline number, but you strip out the food and energy, which the Fed continues to say it is too volatile to basically measure inflation. So the core numbers are really what the Fed is looking at with the CPI report. Now, of course, they also use the PCE report, and that's a whole nother story. But as far as what the Fed is trying to look at here, they're trying to get an idea of where core is coming in, since in their mind, monetary policy that they control really does not affect food or energy at all. So to see this continue to tick down, if we do hit this 5.7, going to be a really good thing for the stock market, in my opinion, as I think a lot of investors as well as Wall Street is definitely watching this 5.7 forecast and saying, hey, if we can actually hit that, that's going to be another indicator that inflation might be on its way down. So now let's go ahead and take a look at this month over month. This is just on the investing.com economic calendar. We can see right here, core CPI month over month is expected to come in at 0.6%. Now, this is kind of where things get a little bit fuzzy, in my opinion, as last month we also did have a 0.6% month over month inflation rate on core, and so to have another 0.6% kind of alludes to the fact that maybe nothing is slowing down. So I'm going to hurry and give you guys a hypothetical scenario though of something that might be really good. If we see that core number come in at maybe 0.5, that might be a reason for the stock market to have a little bit of a rally. If we start to see these core month over month figures come in under estimates, this is going to be a really, really good thing. And it's also going to signal to the Fed that their tightening policy is working. And when they know that their tightening policy is working, well, it gives them more incentive to possibly pivot sooner, right? And to actually become a little bit more, accommodative. Not that we're going to be going accommodative by any time soon, but they can at least slow down the pace at which they're tightening policy. So maybe instead of getting that 75 basis point hike this month, we might get the 50, which if you guys have read the FOMC minutes, then they were kind of trying to decide, do we go with the 50 BP hike or do we go with the 75 basis point hike? Now, the thing is that with the news that happened last week between our hot jobs report and the JOLTS report, different things like that, we're already getting indicators that the market needs to have that 75 basis point hike coming into July's interest rate decision from the Fed. But if we got something like a cool down CPI number, maybe it would give them the incentive to say, no, we can actually go with the 50 BP hike. And if that does happen, I will say that markets are probably going to rally, especially with the NASDAQ and different indices sitting at key levels near their upper support line. Make sure you mark your calendars for Wednesday, July 13th. You're going to want to catch this CPI report. I think it's going to be one of the most important CPI reports that we get all stinking year. So anyway, guys, that's just my public service announcement to y'all, talking about the CPI report and giving you guys what the consensus numbers are right now. I hope it goes well, and I hope you guys have a profitable week of trading. And until next video, we'll see you next time.